You know, Warren Buffett isn't just a name in investing. He's a legend, a man whose wisdom has quietly shaped the fortunes of millions. But here's the thing. Wall Street doesn't want you to know his real secrets. They'd rather you chase the latest hot stock, the flashiest fund, or the newest trend. But Buffett's approach? It's timeless, it's simple, and it's brutally effective. Today, I'm going to share with you 10 Warren Buffett investing secrets that Wall Street won't tell you. These aren't just tips. They're principles that have made Buffett one of the richest men in the world. If you want to build lasting wealth, you need to understand these secrets and apply them to your own investing journey. Secret number 1. Invest in what you understand. Buffett famously avoids businesses he can't grasp. He doesn't buy into complicated tech startups or trendy industries just because they're popular. Instead, he sticks to companies with clear, understandable business models. Think Coca-Cola, American Express, or Geico. These are businesses you can explain in a sentence or two. When you understand how a company makes money, you're better equipped to judge its value and future prospects. This isn't just about comfort. It's about reducing risk. If you don't understand a business, you're essentially gambling. Now contrast this with what most investors do. They jump on the latest buzz, buying stocks because they heard a rumor or saw a flashy ad. They don't take the time to understand the company's fundamentals. That's why so many lose money. Buffett's secret is simple. Knowledge is power. Invest in what you know and avoid what you don't. Secret number 2. Look for companies with a durable competitive advantage. Buffett calls this an economic moat. Imagine a castle surrounded by a deep moat filled with alligators. That moat protects the castle from invaders. In investing, a moat protects a company from competitors. It could be a strong brand, a unique product, or a cost advantage that others can't easily replicate. Companies like Apple, Coca-Cola, and Visa have wide moats. They dominate their markets and fend off competition year after year. Investing in companies with moats means you're buying a business that can sustain profits over the long term. Contrast that with companies that have no moat. Those that compete only on price or trendiness. They're vulnerable to new entrants, changing consumer tastes, or technological disruption. Buffett's secret is to find the castle, not the sandcastle. Secret number 3, be patient. Buffett's favorite holding period is forever. He doesn't buy stocks to flip them for a quick profit. Instead, he looks for companies he can hold for decades. This patience allows compounding to work its magic. The longer you hold a great business, the more your investment grows, not just from stock price appreciation, but from reinvested dividends and earnings growth. Most investors, however, are impatient. They buy and sell based on short-term market movements, chasing gains and trying to time the market. This behavior often leads to losses and missed opportunities. Buffett's secret is to think long-term. Invest in businesses you believe in and give them time to grow. Secret number 4, focus on management quality. Buffett invests in people as much as in businesses. He looks for honest, capable managers who run their companies with integrity and skill. Good management means the company will make smart decisions, allocate capital wisely, and navigate challenges effectively. Contrast this with companies led by executives who prioritize short-term stock price boosts or personal gain. Buffett's secret is to trust the people running the business. If you can't trust management, don't invest. Secret number 5, don't follow the crowd. Buffett famously said, be fearful when others are greedy, and greedy when others are fearful. This means you should buy when the market is down and sell when it's overheated. Wall Street thrives on herd mentality, pushing investors to buy high and sell low. Buffett's secret is contrarian thinking. When everyone else is panicking, look for opportunities. When everyone else is euphoric, be cautious. This approach requires courage and discipline, but it's how Buffett has consistently beaten the market. Secret number 6, always value a business based on its intrinsic worth, not its market price. Warren Buffett is a master of value investing, which means he looks beyond the daily ups and downs of stock prices and focuses on what a company is truly worth. This intrinsic value is calculated by analyzing the company's future cash flows, earnings potential, assets, and competitive position. It's a deep dive into the fundamentals, not a glance at the ticker. Most investors get caught up in market hype, chasing stocks that are hot or trending. They buy when prices are high and panic sell when prices drop. Buffett's secret is to ignore the noise and focus on the underlying value. If a stock is trading below its intrinsic value, it's a bargain. If it's trading above, it's overpriced. This disciplined approach helps avoid emotional decisions and leads to better long-term returns. Secret number 7, keep your investment costs low. Buffett understands that fees and expenses can eat away at your returns over time. Whether it's brokerage fees, fund management fees, or taxes, these costs compound against you. That's why he advocates for low-cost index funds for most investors who don't have the time or expertise to pick individual stocks. Contrast this with the Wall Street norm, where many investors pay high fees for actively managed funds that often underperform the market. Buffett's secret is simple: minimize costs to maximize your net returns. Over decades, even a small difference in fees can mean hundreds of thousands of dollars in your pocket. Secret number 8, don't try to time the market. Buffett famously said, "The stock market is a device for transferring money from the impatient to the patient. Trying to predict market highs and lows is a fool's game." Even professional investors get it wrong more often than they get it right. Instead, Buffett's secret is to stay invested consistently. Through good times and bad, this means setting a plan, investing regularly, and resisting the urge to sell during downturns. The market will always have ups and downs, but over the long term, it tends to rise. By staying the course, you let compounding work in your favor and avoid locking in losses by selling at the wrong time. Secret number 9, focus on businesses that generate strong free cash flow. Free cash flow is the money a company has left after paying all its expenses and capital investments. It's the cash that can be used to pay dividends, buy back shares, reduce debt, or reinvest in growth. Buffett looks for companies with consistent and growing free cash flow because it signals financial health and flexibility. Many companies report profits but don't generate real cash, which can be a red flag. Buffett's secret is to dig deeper than earnings and focus on cash flow. A business that generates strong free cash flow is more likely to survive downturns and reward shareholders over time. Secret number 10, be humble and admit when you're wrong. Buffett is known for his humility and willingness to learn. He doesn't pretend to know everything, and he's quick to admit mistakes. This mindset allows him to cut losses, adjust strategies, and avoid repeating errors. Most investors let pride get in the way. They hold on to losing investments hoping they'll bounce back or double down on bad decisions. Buffett's secret is to be honest with yourself. If an investment thesis no longer holds, it's okay to sell and move on. This discipline protects your capital and keeps your portfolio strong. Now let's bring it all together. These 10 secrets aren't just abstract ideas. They're practical principles you can apply right now. Warren Buffett's success isn't about luck or insider information. It's about discipline, patience, and a clear understanding of what really matters in investing. So, what's stopping you? The best time to start investing wisely was yesterday. The second best time is now. Take these secrets, make them your own, and watch how your financial future transforms. Remember, investing isn't about getting rich quick. It's about building lasting wealth that gives you freedom, security, and peace of mind. Warren Buffett's secrets are your roadmap. Follow them and you'll be well on your way. Secret number 6. Always value a business based on its intrinsic worth, not its market price. Warren Buffett is a master of value investing, which means he looks beyond the daily ups and downs of stock prices and focuses on what a company is truly worth. When prices are high, your fixed amount buys fewer shares. When prices are low, it buys more. Over time, this smooths out the cost of your investments and reduces the risk of buying at the wrong time. Buffett himself has praised this approach for most investors, especially those just starting out. It's simple, disciplined, and effective. Step 5. Reinvest your dividends. Many companies pay dividends, cash payments to shareholders. Instead of spending these dividends, reinvest them to buy more shares. This accelerates compounding and grows your investment faster. Buffett's own wealth grew significantly through reinvested dividends. It's a powerful habit that can make a huge difference over decades. Step 6. Avoid debt and leverage. Buffett warns against borrowing money to invest. While leverage can amplify gains, it also magnifies losses and increases risk. Most individual investors are better off investing with their own money and avoiding debt. High-interest debt, like credit cards, is especially dangerous. Pay off any such debt before investing aggressively. Financial freedom starts with being debt-free. Step 7. Keep emotions in check. Investing can be emotional, fear during downturns, greed during booms. Buffett's success comes from his ability to stay rational and disciplined. He doesn't panic sell or chase fads. Develop your emotional resilience. When markets fall, remind yourself of your long-term plan. When others are euphoric, be cautious. Emotional control is one of the most valuable investing skills. Step 8. Review and adjust your portfolio periodically. While Buffett advocates long-term holding, he also reviews his investments regularly to ensure they still meet his criteria. If a company's fundamentals deteriorate or better opportunities arise, he's willing to sell. Set a schedule, perhaps once or twice a year, to review your portfolio. Make adjustments based on changes in your goals, risk tolerance, or market conditions, but avoid frequent trading, which can increase costs and taxes. Step 9. Learn from mistakes. Buffett openly admits his errors and uses them as learning opportunities. You will make mistakes too. The key is to analyze what went wrong, adjust your strategy, and avoid repeating them. Keep a journal of your investment decisions and outcomes. Reflect on what worked and what didn't. This practice sharpens your skills and builds confidence. Step 10. Stay humble and patient. Wealth building is a journey, not a race. Buffett's greatest secret might be his humility and patience. He doesn't try to be the smartest or fastest investor. He simply follows sound principles consistently over time. Remember, even Buffett had years when his investments underperformed. The difference is he stayed the course and kept learning. Now let's talk about some common pitfalls to avoid so you don't sabotage your own success. First, avoid chasing hot tips or speculative stocks.